Welcome to our live session today with Peter. Welcome back, Peter. So what's new in the markets?
Well, we had an impressive U-turn by the UK government yesterday regarding its plans to scrap a tax rate hike, which more or less created turmoil in the markets. It was characteristic that more or less the UK government backed down. It was even a little bit humiliating for Prime Minister Truss. Overall, I would dare to say, though, that the UK government is trying to regain the confidence of the market, the trust of the markets. However, that still remains in the balance. On the other hand, we have to note that the British pound is on the rise, and it's on the rise against the US dollar, the euro, and JPY. So it's a broader strengthening of the pound, may I add. On the fundamental side, we have Finance Minister Kwarteng, which may have to expedite the plans of the announcement of the plans to curtail UK debt, which has reached very high levels. And I think that's going to be eagerly awaited by the markets. Now, across the world, we had during today's Asian session the release of RBA's interest rate decision. The bank proceeded with a 25 basis points rate hike only. That was a scenario which we had covered yesterday. And overall, the hawkishness of the bank in its accompanying statement, actually Governor Lowe's accompanying statement, tended to ease. And more or less, we may say that may have disappointed Aussie traders, which were expecting more or less a 50 basis points rate hike or a more decisive tone. That didn't come up. AUD USD dropped 60 pips, around 60 pips upon release. And we may see monetary policy outlook not being as supportive for the Aussie as it has been in the past. It was more or less also a result also from the warnings which were issued by the bank in the last meeting minutes, as well as by Governor Lowe, that as time progresses, the size of rate hikes is going to diminish.
How about the USD?
Well, the US dollar remains rather elevated at rather high levels. However, more or less, I would dare to say that those strong bullish tendencies which the US dollar had seem to have now eased substantially. Nevertheless, though, monetary policy outlook remains in favor of the US dollar in contrast to other currencies and may provide support once again. Also, another issue which could create some support for the USD would be the uncertainty surrounding global fundamentals, never minding the war in Ukraine, also the possibility of a global economic outlook slowing down. All of that combined tend to create some support for the USD, or it could at any given moment.
What's on the calendar for today?
Well, as we're speaking, we get Eurozone's producer prices growth rate. That's for August. However, I would be highlighting in the American session the release from the US of the factory orders growth rate, which is expected to accelerate from -1% to 0%, which more or less tends to imply that the contraction of economic activity has been halted, and that's a positive for the USD. I would also be noting from the US the JOLTS job openings for August. Now, normally this release is medium to low impact, expected to be medium to low impact, yet we have the market's focus being drawn towards the US employment report for September. That's on Friday, so it may get some attention. It's expected to drop, and if actually so, could weaken the US dollar. We have a high number of Fed policymakers scheduled to speak throughout the American session, and should they sound hawkish enough, we may see the USD getting some support. Also, for oil traders, I would be noting the release of the AP weekly crude oil inventories figure. It's just before the start of the Asian session, and should the reading show another considerable rise of US oil inventories, that could weaken oil prices, as that would imply practically a slack in the US oil market. given that demand levels were not able to catch up with production, and more or less the increase and the inventories in the US tend to rise. Now, in the Asian session tomorrow, I would be noting the release of Australia's and Japan's services and composite PMI figures. Those would be for September. And I would be highlighting RBNZ's interest rate decision. The bank is expected to hike rates by 50 basis points. Currently, NZD-ORS implied probability of around 70% for such a scenario to materialize. Should the decision be to actually hike rates by 50 basis points, and that be accompanied also by a hawkish, confident tone in the accompanying statement, we may see the Kiwi getting some support. Anything less could weaken the Kiwi.
What about the rest of the week?
Well, we have on Wednesday the release of the final PMI figures for the services sectors of Germany, France, the Eurozone, and especially we highlight the UK, given that UK's GDP comprises to a wide degree from the services sector. So we may see the release affecting the pound somewhat. Yet in the American session, I would be highlighting the ISM non-manufacturing PMI figure. It's for September. Should the reading drop, that would imply practically a slowdown in the expansion of economic activity for the US services sector and could weaken the US dollar somewhat. On Thursday, we make a start in the Asian session with Australia's trade data. Trade balance is expected to drop a bit, which would imply that the Australian economy benefited less from its international trading activities and could weaken thus the Aussie. And I would also be noting from Germany the industrial orders growth rate, while from the US we're getting the weekly initial jobless claims figure. Should the figure rise, that would imply more or less that the slack in the US employment market seems to be building up and could weaken the US dollar. I would also be noting, or if you prefer, highlighting the crown of financial releases on Friday. That would be the US employment report for September. The NFP figure is expected to drop, yet at the same time the unemployment rate is expected to remain at low levels, actually unchanged at 3.7%. And given that the NFP figure is expected to drop at 250k currently, should the actual rates and figures meet their respective forecasts, despite some disappointment which may be caused by the drop of the NFP figure, the release as such, I think, would allow the Fed to continue on its rate hiking path, and that could provide some support for the USD. At the same time, we're also getting from Canada the employment data for the same month. So USD CAD will be an interesting couple to watch, given that we may see a contrast building up and a divergence being built for the two currencies.
Any final comments?
Well, we want to see whether the market sentiment will more or less turn cautious. Mind you that US stock markets may start orienting themselves in the earnings reports, which are starting practically next week. And that could start shifting the market's attention. But for the time being, I think we're going to be seeing markets being driven mostly by fundamentals, and at the same time keep the attention on the US employment report for September on Friday.
Thank you, Peter, for today. Stay tuned for our next live session with Peter.
So, welcome to the technical analysis part of the presentation for today. In front of your screens, you have the US dollar index for our chart, and practically every chart which is to be presented today, unless otherwise stated, is to be of the same time frame. So, with no time to waste, let's have a look at USD index's technical analysis. Now, we make a start with noting the downward direction of the US dollar index. The downward motion is being driven practically by the downward trend line initiated on the 29th of September, despite some also arguing that there was already a wider drop from 28th. Nevertheless, the end result remains the same. The US dollar is going downwards. And we have to note that in its downward motion, it has broken the 112.50 and the 111.65 support lines, both of them now turned into resistance. We saw during today's early European session the index also testing the 110.90 support line. So practically we tend to maintain a bias for a bearish movement for the index as long as the price action remains below the downward trend line, in which case we may see the price action dropping, breaking the 110.90, and we would be highlighting practically the 110 as the next support line, which used to be more of a resistance level actually. But given that the price action is above it, the role has switched. Excuse me. Some may argue also this level as it show. I think this is more valid as it has 1, 2, 3, 4 touches. It's more tangible. Now, in case that we see the US dollar index remaining rather stable and practically the 110.9 holds its ground, that could lead the index to break the downward trend line, yet I would expect it to also respect the 111.65 resistance line and the 110.90. So a possible stabilization may occur between the two pre-mentioned levels. For a bullish outlook, we would require the price action of the US dollar index to break the pre-mentioned downward trend line, break the 111.65 resistance line, and reach, if not even breach, the 112.50 resistance level. For the time being, we note that the RSI indicator is pretty low. It's actually right now at 38, which may imply rather bearish sentiment on behalf of the market. And I would dare to say that also the correction higher during today's European session was performed after the index hit practically the lower Bollinger Band. It's a similar case like here. So I wouldn't be surprised to see such a stabilization taking place for now, which could be shifting practically the downward trend line to the right. Let's have a look now at Euro USD. Euro USD, which has been on the rise, possibly mostly driven by, give me a sec, by the weakening of the USD. It's like seeing the US dollar index, however, in reverse. Okay, let's make the necessary corrections here. Turning the former resistance line which have been broken, the 0.97 and the 0.98.10 to support lines, given that the price action now is above it. The 0.99 will be holding its ground. The next resistance level is definitely going to be parallel level at 1. A little bit higher. Note these beautiful touches here. I'm keeping this even here. No, here. 1.111 10, 20, that is, and another one even higher. I would be keeping one touch here, second touch here, but I would prefer this one. It's even more solid. So I'm keeping the 1.0115, 110 in red. 0.99 also remains. First support line being now placed at 0.9810. $0.97, and the final one being placed at 0.96. That's it. So for the time being, we maintain a bullish outlook for Euro USD as long as the price action remains above the upward trend line initiated since the, let's have a look, 28th of September. Note that the RSI indicator is also pretty high. It's currently at 61. So we see the bullish sentiment being applied despite the correction lower during today's European session after a rise. We maintain our bullish tendencies and we would expect the price action of Euro USD to rise, break the 0.99 and start actively aiming for 1.0020. On the other hand, should there be a stabilization, we may see the price action remaining between the 0.99 and the 0.99810, while should the bears take over, we may see Euro USD actually dropping, breaking the pre-mentioned upward trend line, breaking the 0.9810, and start actively aiming for the 0.97. Okay, let's have a look now at GBP/USD cable, which has risen pretty high, and it's characteristic that cable's rise has been not only against the US dollar but also against the euro and JPY, so it's a wider strength of the pound here. So we should make some readjustments here. Definitely this could go a little bit higher. Make the testing here. In red that would be the 1.4025. One test, test, test. Seems pretty valid. On the other hand, in the downside, keeping this one as the first support line, that would be the 1.121. green. Next one, also in green. That would be the 1.1025. And the last one here. 1.0790. Okay, let's go hunting now for some resistance lines. Could be a level, this is even better, but that's a little bit too wide. I'm keeping it. At 1.1730. And the last one, yeah, catches beautifully the sideways motion. 1.19. Okay, let's widen this. Here we go. Last support line being now placed at 1.079. And we lock this in. So we tend to maintain a bullish outlook for cable, given that the price action remains above the upward trend line, initiated since the 28th of September. So let's confirm that though. Yep. Also note the RSI indicator, which has corrected a little bit lower, but it's still at rather high levels. It's currently at 63.5. So the bullish sentiment seems to be still present for the time being, and as long as the price action remains above the upward trend line or does not clearly break it, we tend to maintain our bullish outlook. In which case, I wouldn't be surprised to see the price action rising, breaking the 1.1425 and start aiming for the 1.1730. We have to note here that a number of you guys, we have a comment here that there may be a mid-level between the 1.1730 and the 1.1425. Yes. Okay, let's have a look. Could see a mid-level somewhere here. This touch. That could be also valid level, yes. At 1.1590. Okay, so in the case of a bullish outlook, we would expect the price action to rise, break the 1.1425, aim if not breach the 1.1590. If we drill down to the daily chart, we see how strong the bullish tendencies actually are, especially today. It resembles more the reflect on Friday and Thursday rather than yesterday with the daily chart. Drilling back down to the 4-hour chart. Okay. Now, should a stabilization occur given also the correction lower in the European session, I would like to see the price action of cable breaking the prementioned upward trend line clearly and remaining between the 1.1425 and the 1.1210. Now, for a bearish outlook, I would expect the price action to drop, break the prementioned upward trend line, break the 1.1210, and aim for the 1.1025. Let's have a look at USD JPY, which should be quite stable and actually is. Let's make the necessary corrections here to the label position because the levels as such are still valid. So we see that USD JPY has maintained a sideways and narrow range bound movement just below the 145 resistance line, which is pretty clear that seems to be continuing. So we tend to maintain our bias for a sideways movement for now. Even yesterday's warning from Japan's finance minister for possible market intervention seemed to have little, if any, results. Actually, did have none. Okay. I would dare to say that the drop here was more a result of a weakening of the US dollar rather than strengthening of JPY. So for the time being, I wouldn't be surprised to see the pair remaining, and practically that would be also underscored by the narrowing of the Bollinger Bands, highlighting exactly this low volatility here for USD JPY for the time being. Now, less should the bulls take over, I would expect the price action to break above the 145, which practically is a record high, and start aiming for 147.50 as a next possible target. On the flip side, should the bears take over, we may see the pair dropping, breaking the 143.50, and start aiming for 141.50. Now let's have a look at USD CHF. Now USD CHF has been on the rise. And that's interesting on the sense that the US dollar has been dropping. So practically the rise of the USD CHF from the 28th, from the 30th up until today was a result more or less of a weakening CHF rather than a strengthening US dollar. Nonetheless, today we see that CHF has been gaining some ground given that the US dollar has been weakening. And so practically we saw the pair driven down and aiming for 0.9860, a pretty wide spectrum here. Given that the pair has broken the upward trend line guiding it since the 30th of September, given also that it has respected the 98.60 support line, and lastly but not least, given that it has an RSI indicator which remains pretty close to reading of 50, it's actually now at 54. I would expect the price action to remain in a sideways movement until the pair decides on the direction of its next leg. The sideways motion, which could be between the 0.9960 and the 0.9860. It could be a little bit narrower than that, but overall I wouldn't give it more than 10 pips less. but overall, I think the 100 pips frame here seems to suit the pair finely. Nevertheless, should the bears take over, we may see the price action breaking the 0.9860 and start aiming for 0.9765. On the flip side, should the bulls take over, we may see the price action being on the rise, breaking the 0.9960 and start aiming for the 1.0050. Let's have a look at AUD/USD. AUD/USD, which is currently fighting with the 0.6485, however, to the downside. So we have to correct this and turn it into support line. New resistance line being placed at 0.6760. Widening a little bit up. Now the big question here is whether we are talking about a sideways movement or not. And in this case, we may lower this. Let's go hunting for a new resistance line. Sorry, support line. Daily chart. Okay, daily chart. Now we set the 0.6110 as the new ultimate support line. I know it's pretty wide, but it's a low point for the 8th of April. $65.30 new resistance line. $61.10 being the ultimate support line. Second support line being placed at 0.6270, that remains. 0.64 also remains. New resistance line has been shifted to the upside, given the price action has broken multiple times through the level, and new peaks have been formed, and that would be the 0.6530. We also know that the second support resistance line, the 0.6670, which has been tested to the upside and to the downside, so both sides have tested it. And the 0.6760 being the ultimate resistance line for now. For the time being, we see that the price action remains sideways, and it's characteristic that the RSI indicator is running along the reading of 50. implying a rather indecisive market. We would expect the price action to remain in that sideways motion direction, if you prefer, between the 0.6530 resistance line, which has been tested once, aimed for, tested twice, and the 0.64 briefly broken and tested once again. So they seem to be pretty valid. Now, should the bulls take over, we may see the price action rising, breaking the 0.6530, and start aiming for 0.6670. On the other hand, should the bears take over, we may see the price action dropping, breaking the 0.64, and start aiming for 0.6270. Mind you that the flattening of the Bollinger Bands also tends to underscore the sideways movement of the pair for now. Moving now to USD CAD for our chart. USD CAD, which has broken the 1.3650 support line, now turned to resistance. I'm going to be using this touch here as a new level for support in green, and that would be the 1.3225. $1.3820, the new second resistance line. $1.3490, the first support line. $1.3350. And 1.3225. Moving now for the Kiwi. And here we have the ultimate movement downwards. Let's reassess the resistance support lines. Could be even lower. Could be even here. One touch, second touch. I'm keeping this. In a sideways movement, that's clear. And let's move the support lines out of the way. You can see the stabilization, this capping of the upward movement here, which is a nice resistance line as well as here. Could be a little bit lower. So this level has been tested to the upside and to the downside. Seems pretty valid. That would be the 0.60.10. Yep. $0.5890, the second resistance line, and 0.5750, first resistance line. First support line now being placed at 0.5570. Let's go hunting for new support lines. Okay, that's in the distance, so let's drill to the daily chart. weekly, daily. Okay, weekly back. Here, that should be it. Let's adjust for chart. Zero 5285. Sorry, that's not. 54. Sorry. 05450. 05570. 05750. 05890. 0.6010. So we tend to maintain a sideways bias for now for NZD-USD's direction, probably between the 0.5750 and the 0.5570. It's 180 pips distance, which should be covering the pair. Nevertheless, should, say for example, RBNZ's interest rate decision tomorrow during the Asian session excite Kiwi traders, and we may see the Kiwi rising, breaking the 0.5750 and start aiming for 0.5890. On the other hand, should the decision as such disappoint Kiwi traders, as the bank may sound dovish, in which case we may see the pair retreating, breaking the 0.5570 and start aiming for 0.5450. But the main scenario for now is that the pair will probably remain in sideways motion between the 0.5750 and the 0.5570. Okay, so that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello, my name is Christina and welcome to another video. This time we will talk about liquidity and volatility in Forex. Let's start with liquidity. So, what is Forex liquidity? Liquidity in the Forex market refers to the ability of a currency pair to be bought or sold without major changes on its exchange rate. Simply put, when you can easily buy or sell a pair, it is considered highly liquid. In fact, the amount of money The flows in the market as well as the number of traders that want to buy a certain asset determine the level of liquidity. When there is a decrease in liquidity, there are fluctuations in the quotations. During such periods, buy and sell order volumes can change many times. Now, which are considered the most liquid pairs? Euro USD, USD CAD, GBP USD, USD JPY, AUS USD, GBP JPY, Euro JPY, USD CHF, and ZD USD are some of the most liquid pairs. They have the highest available trading volumes. However, as markets open and close across the globe, their liquidity can change throughout trading hours. Did you know that the daily Forex trading volume has reached $6.6 trillion, making the Forex market the most liquid worldwide? You can be confident that in such a market, you will always be able to buy or sell an asset, as there will always be someone available and willing to buy or sell. This is what liquidity is in a nutshell. Stay tuned for part 2, where we will talk about volatility in Forex. Thank you for watching.
Okay, all right. I see a couple of you guys streaming in. Natalia, Marky, Joffrey, nice to see you guys here, nice and early. Right. It's a fun session today. Guys. I want to encourage you to we have a chat panel over here, right? So we have a chat panel which you can try to use. Hey, good day to you too, Joffrey. Right. Yeah. So yeah, there's a chat panel, right? I'm not sure if you guys can see it. Right. So yeah, you can just send your messages, send your questions in there. Right. Just let me type to everyone. Yo. All right. Yeah. You can send your messages there. Right. That is the place where I can not only your messages, but your questions so that I can answer them along the way. Right. Today will be a pretty exciting topic, right? It's on support and resistance, which forms the foundation of all of our trading strategies, right? Support and resistance, right? There are the right ways to do it and there are the wrong ways to do it, right? So in today's session, we're going to show you some of the ways that I've used over the years, right, to trade very profitably, right, in combination with a couple of like other forms of analysis. But support and resistance by itself is always my main one. It's always my my go-to approach, right? So I need good support and resistance before I can even trade. Okay, nice to see you tune in, Edwin. Right, welcome to the webinar. Right, welcome to the webinar. Right, so yep. Once again, I want to encourage you guys. Anytime you got questions, just send it in. Send it right through. I'll do my best to answer them. Okay. Now let's begin today's session. Right. So as usual, right, this webinar is brought to you by IronFX. Right. Couple of things that you need to take note is this, of course, is the risk warning and the disclaimer that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now, I think I can still see a couple of people streaming in, right? And yeah, let's begin. Let's begin, all right? So for those of you guys who are here for the first time, you might be wondering, who is this dude over here, right? Who is doing the webinar, right? So this is a younger version of myself. My name is Desmond Leong. I'm an external analyst over here at IronFX, right? So I also run the award-winning research firm Everest Fortune Group, right? So we are Best FX Research 2019, 2020, 2021, and finalists for Best Equity 2020 and 2021. Strong team of traders, strong team of prop traders, right? So if there's any word of encouragement I share with you guys is that I'm a young guy, right? I'm just barely 32 years old, right? And I trade full time, right? So I want to encourage you that you don't need to be 30 years in Bloomberg or 30 years in trading to be a good trader. You just need to learn the right stuff, right? Learn the right stuff, you can be a good trader, right? So that's what we are dedicated to bringing you here at IronFX. We're going to bring you the highest grade education. I would dare even say institutional grade education, stuff that you don't find on Baby Pips, stuff that you don't find on Forex Factory, right? So my research firm, we usually advise the banks, the brokers, the hedge funds on where the markets are heading, right? But we have this special partnership with IronFX to bring you guys the good stuff, or the stuff that will take care of trading really to the next level. Okay, so take this opportunity that anytime you guys have questions, just ask me right away. Just send it through. I literally have another screen that is open over here, watching for the questions. Okay. Now let's move on from here. Okay, Tony, nice to see you tune in too. Nice and early, right? Our agenda for today, we're going to touch on a couple of key things, right? Swing highs, swing lows, right? How to do them correctly, right? Pullback, support, and resistance. If we have time, we try to look at trend lines. I'll be showing you some about the probability, how to improve the probability of your setups. Okay, I'll be showing you how to improve the probability of your setups after that. All right, now let's move on to the next one. When it comes to swing highs and swing lows, right? What you are looking for, right? What you're looking for is what I call significant swings. Okay, significant swings. So significant swings, when you're looking at a chart, right? Looking at a chart, you're looking for these levels which are very significant. Okay, because the more significant it is, the more effective it's going to be. Many times when people trade, right? They look at they see small little movements and they place too big of an emphasis on it. All right, they see small little movements and they place too big of an emphasis on it. What do I mean by that? Right, like this. This is what I mean. This is the wrong way, right? So you look at these small little movements and you place too much emphasis on the small little fluctuations, right? So this is an example of drawing support and resistance wrongly. Okay, this is an example of drawing support and resistance wrongly. You're placing too big an emphasis on the small, insignificant movements. And of course, I'll be touching this Fibonacci maybe in the next couple of webinars, right, where we're teaching you very advanced approaches to trading. But the important thing is that, right, when you draw swing highs and swing lows, what you're looking for is very significant levels, like you can see, significant movements. Now, I do want to show you, I do want to take this opportunity to maybe show you some examples here. Okay, if you guys have happen to have a chart request you'd like me to take a look at, let me know. Maybe I can even analyze it live with you guys, right? But yeah, so let's just take a look at this. Okay, I was looking at a big call on Bitcoin, but let me show you what I mean by a significant level. If you're looking at Bitcoin over here, okay, what are the significant levels we're looking at, right? We're looking at this. Oh, sorry. This is a nice significant level. This is pretty significant. This is not so much. This is a tiny movement over here, right? You got a big movement over here. You got a big movement over here. Got a big movement over here. Maybe you can consider this as a nice movement, but you can consider this nice movement coming down. So these are the key levels that I usually take a look at right away. When you have established these levels, then you can start drawing. I like to put like nice horizontal lines over there. So I put a nice line over here, right? I put a nice line over here, put a nice line over here, put a nice line probably over here. So you start highlighting the key levels first. Okay, start highlighting the key levels. And what do we notice is that, for example, here, very nice support level where price is revisiting, right? I will explain the psychology of this thing. Is called a pullback support that we're looking at. There's a certain psychology to it, which I'll be explaining to you in a moment, right? Nice to see you here, Gulam, right? There's a certain psychology to see on what this thing is called a pullback support. Okay, now this first and foremost, you need to look for these kind of significant levels to call to draw a support and resistance. Okay, you notice that when you change the different time frames, it starts to look, things get a little bit more granular, right? You can see this, right? You got this part over here, you got this part over here, this part over here, maybe this part, but okay, maybe not this part, right? But so these are the key levels that you're looking at. Look for significant levels. We are not going to place an emphasis on this movement here, this movement. These are not key levels, right? Look at this movement. It's not important. No one's going to look at these levels, and that's why it's not going to be that effective when you use them in trading. Nice to see you here, Benjamin. Right? So yeah, so this is the first thing that I want to let you know is that when you're trading, there we go. Look for the significant levels, okay? Look for the significant levels. Okay, ignore the insignificant ones. Okay, there are a couple of, so when you find the significant levels, that is where there are the single swings they look at, right? So the thing about single swings is that they are not very strong. Okay, so a single swing low over here, a single swing high over here, by themselves, they are not very strong. Okay, Natalia, maybe I'll take a look at gold in my next example, right? Yeah, that's significant. You know, if it's just a single swing high or a single swing low, it is not going to be very strong. What you want to look out for, rather, is you want to look out for multiple swings, right? One swing, two swings, three swings, four swings. Man, that's a very nice level, right? Four of them lining up together. And what I like to do is I like to highlight it and becomes an area for you to look at. Can you see that? Right, I'm just going to erase it for you one more time, right? How do I erase my drawings? Erase all in slide. Yes, there we go, right? So it's always a case when you have one swing, you try to go further back and see how far back it can go, how far back it can go, how far back it can go. Don't worry if like you have the wick up here. You can see this is the wick up here. This is the wick up here. Don't worry if the price is not lining up at exactly at the same level. So sometimes people get too absorbed by looking at the exact level, right? The single price point, and they think that that has, you know, support and resistance is based on a single price. The truth is support and resistance work based on areas, right? So in this case, you notice that once I draw that, I will highlight this area, right? You notice I highlight a big area there, right? So I highlight that is the area of support, that is the area of resistance we're looking at. Okay, so now let's see if you can take a example, a look maybe at gold, or maybe if you want, I like to look at the futures, but you can look at XAU USD, and we can look at gold over here. Is there any multiple swing high or swing lows you can look at right away? Right? Yes. Oops, right, one thing here. Give me a second. Okay, so I was just looking at something here. So this is a big an example of a nice big level, nice big swing high, right? Because why is it nice? Because there's one big level over here and there's another big level over here, two major levels that you can look at. So the next thing you're going to ask me is, okay, so where's the support, right? So okay, that's a nice, so this is what I call fairly nice bounce, right? I would consider it as one bounce, but because in this example it bounced off at exactly the same spot, and this was another nice big bounce over here. This bounce, I'm not too keen of it. It's kind of small. It's kind of small. I much prefer this bounce and this bounce over here, right? So a trick on identifying how significant a bounce is, how significant a swing high or swing low is actually to see how many bars to the left and how many bars to the right. You know, is it below off? So in this case, right, this is a major bounce, right? This case, right, the last time price revisited here, you know, you can see is from here and then it keeps going on, right? This one is all the way on. You can see how such a swing level usually has a lot of bars on the right and on the left, on the right and on the left. In this case, right, if you have a small little swing high, swing low here, yeah, sure, you know, on the right is great, but on the left, you know, it very quickly breaks down. You know, you can see it very quickly the levels get broken. So to tell whether a swing high or swing low is significant, usually you see how big, how much on the left and on the right is like clear space. All right. So in this case, right, for gold, we see that there's a really fairly nice support level over here, right? There's a nice support level. I'm going to put it in green, right? And that's the important thing that you need to take note of, right? So why price bounce off here was because, you know, people saw that, you know, it bounced up one, bounced up twice, it's coming down again, right? And that's why they are confident that you bounce up. The more levels that line up nicely in a horizontal level, the higher the chance that price is going to make, the stronger the support level, and hence the higher the chance is price is going to make a nice bounce. Okay, the higher the chance is price is going to make a nice bounce. So we have the support and resistance levels over here. Later I'll be showing you perhaps some of the trend lines I can look, because I don't want to dive too much into the different forms of analysis, but I can already see so-called a trend line here. You can see different kind of trend lines, potential breakout. This is a little bit more advanced form of analysis, right? So we could be seeing price come all the way down to here if it breaks this level over here. I will explain that to you later on how it works, because I do see overlap levels and pullback levels, which I will need to explain to you in this webinar before I touch on them. Otherwise, it'll be a little bit too confusing. Okay, now let's go back to this. All right, so multiple swings is effective. That is simple, right? You know, swing highs, swing lows, multiple swings, easy stuff. Okay, what I do want to let you know is one of the strongest form of support and resistance is called the pullback. Okay, one of the strongest form of support and resistance is called the pullback. What is the pullback? Okay, this is a pullback. Let me explain to you the psychology of a pullback. Okay, psychology of a pullback. You know, you got price. Okay, imagine price touch this level, it dropped once. Touch this level, it drops the second time. Touch this level, it drops the third time, right? And now price is over here. When price is over here, a lot of people are thinking that it would drop again, right? Because it makes sense. Price failed to break up once, failed to break up twice, failed to break up 3 times. Now it's back there, they're expecting it to drop down. The problem is that if price suddenly breaks up over here, it starts to go up. As you can see, you know, there was a breakout. Okay, there's a breakout. Price is going up. And those people, everyone who was short over here, meaning they were selling, everyone that was selling over here, they suddenly get taken for a ride, right? They get taken for a ride. It goes up, it goes up, it goes up, right? They start questioning the meaning of their life. They're like, oh man, I should have used a tighter stop loss, right? It's a terrible time now. You know, I'm suffering so much losses. It goes up. It goes up, you know, they start cursing their luck. They start thinking that, swear that they'll never trade again until it reaches here. Then it starts reverse, right? So now there is some light at the end of the tunnel, right? They are still holding on to their short position over here, right? This is their short position, meaning that this is the selling position that they had previously. It starts going down, it starts going down, it starts going down, it starts going down, right? And, you know, all the while they're holding onto their trades, right? They are seeing light at the end of the tunnel. And when it reaches here, the initial level where price broke out from, what do you think they are going to do? What do you think most people are going to do? Are they going to hold on to their position, or are they going to close off their position? Okay, Kramer, I see that you have a question. I switched to line graph instead. Can I say, yes, you know, looking at line graphs might work pretty well too, Kramer. We look at it in a bit, right? So when the teller say close the position, and that is exactly correct. You would close the position, right? You close the position, right? And you get out of this trade. You close this position and you get out of this trade. So when you close a position, a short trade, to close a short trade, you need to buy, right? You need to buy an equivalent position to close a short trade. So everyone who was short over here will start to buy, and that usually causes the initial bit of momentum to come in to cause the price to bounce up. That is why it's called the pullback support over here. Okay, it's one of my favorite, right? One of my favorite styles of trading. The pullback support is so effective, right? Once it comes back down to here, right? Price, everyone who has been freaking out since they've been short over here, they've been taken for a while, right? When it comes back to here, they finally close off their positions, and it gives that injection, right? It gives an injection of buy orders that come in fast and quick, that pushes price all the way up, right? And that is what I mean by the pullback support. Price is, where's my mouse, right? Price is essentially pulling back, right? It's pulling back to the support level. That's why it's called a pullback. And support, of course, means that it's below price. Now, people always get confused between the difference between support and resistance. Always remember, if you're a human being, right? Or what do I mean if you are a human being? Everyone here is a human being, right? You are standing on support. The floor is supporting your weight. The chair that you're sitting on is supporting your weight. You are for something to support you, it needs to be, below you, right? You are supporting someone, you're holding the person, you're supporting them, right? So no one ever says that the floor is resisting my weight, right? If you think about it, it's very weird. The floor is supporting my weight, the chair is supporting my weight. So remember, support is always below you. Do not confuse this terminology, okay? The floor is supporting you. The resistance is when you push against something. Resistance is usually above you. The ceiling, you're pushing against the ceiling. You'll not say that, oh, the ceiling is supporting me. It sounds a bit funny when you say it that way, right? The ceiling is supporting me, right? But you're pushing against the ceiling. You're saying the ceiling, is resisting me. This thing is resisting me. You're pushing against something is resisting, right? So resistance is always above price, okay? Support is always below price. Important considerations that you need to take, okay? So the opposite is true when it comes to pullback resistance, right? Pullback resistance, you can see how price bounced once, price bounced twice, price bounced 3 times, right? It doesn't need to be 3 times. Usually once is good enough. One good swing low is good enough. I'll be showing you what I mean by that later. One good swing low is good enough, right? When price breaks it, right, there's a whole bunch of people who thought that it was going up, right? There's a whole bunch of people that thought that it was going up. Now it's dropping. They are being taken on one hell of a ride, right? They're like, oh, shucks, man. Price is dropping, it's terrible. Man, I should never have held on to the position. I should have closed it out. I should have used a stop loss, right? They start questioning the meaning of life, right? It goes low, and then it starts to turn around. When it starts to turn around and it starts coming back up to here, once again, once it reaches the entry, the level where it broke out from over here, as you can see, once it reaches the level where it broke out from, that is where they who were holding onto their buy positions, remember initially they were holding onto buy positions, they would be closing off their trades. To close off their trades, they would need to sell, right? Need to sell. When you sell, that's where price comes down, right? You have that nice bit of momentum, injection of selling orders that helps you push price lower, okay? Now, this is an example of how it looks like, right? So we got a swing low. You can see a very nice significant level here, right? We highlight this as a main resistance level, okay? I mean, you could line it up with Fibonacci. This is slightly more advanced where you can line it up with different stuff, right? And of course, let's just see. This is a second Fibonacci level. You can line it up. I will explain this later. This is how you can fine tune and give yourself very, very high probability setups. Let me see if this actually fast forwards into an example. You can see how price reaches this level, touches it, drops down. Okay, that is what you're looking for. Okay, sure. In this example, I show, right, just in this example, what I'm showing is that I show this resistance level over here. Over time, I'm going to show you how you can combine maybe a trend line channel. I'm going to show you how you can combine an Ichimoku cloud on top. I'm going to show you how to combine Fibonacci. I'm going to show you how to combine Fibonacci projections, right? I'm going to show you how to combine Fibonacci expansions, extensions, correlation, throw in a whole bunch of stuff, and you improve your chances of being profitable, right? That if you ask me, right? A lot of people ask me, is there a single best indicator? Is there a single best strategy that works very well? There isn't. In fact, it's what we call the confluence. You're looking for confluence over here. C-O-N. Confluence also means combination. All right. Well, my handwriting skills is terrible. I'm sorry. Right. You're looking for a combination of indicators to all agree that price is going in a certain direction. In this case, I got the resistance, I got the 61.8, I got 38.2, I got all the Fibonacci, all telling me that price is working out very nicely. Price might reverse from there. And that is how I know that I have a high probability trading setup. We'll learn more of that over time in the VIP room. Yes, for those of you guys who are here, I will share with you how you can get into the VIP room. the INFX VIP room, which we are launching, is pretty fun. It's a pretty nice place to be. You will get direct access to me and my pool of prop traders. Very nice, because you get to ask some really nice questions. You can practice your technical analysis there, and I can teach you I can show you whether you're doing it right or doing it wrong. Okay. Now the next thing I want to show you, right? Next thing I want to show you is overlap support and overlap resistance. Okay. Bam. We are now here. Oh wait, let me see if I can show you. I'll show you an example of a pullback working very nicely. Okay. Let me see if I can show you an example of a pullback working nicely. Maybe. Let's toggle around a bit. Okay. Let's go daily analysis. Okay. Perfect example. Guys, perfect example over here. Now, Marky, your question that you can put there. Yes, closing. If you do line chart, it works well too. Right, this is the pullback that I was looking for. You look at candlestick, it works equally well. Right now, guys, let me show you what I mean by this pullback. Okay, we can agree, right? We can both agree that we have a very, very nice little bounce over here. This is a pretty significant bounce, right? It's a pretty significant bounce. Now we got price that's coming down here, price that's coming down to here. When it reaches down to here, what do you expect is going to happen? Price might bounce up from here, right? Everyone is thinking, yeah, last time price went down there, it bounced up pretty strongly. It's probably going to happen again. Okay, so we have price going down, down, down. It's down there. What happens? Holy smokes, it breaks. Okay, it breaks. People who are long, they start panicking. Right, they start panicking, and now you can see price going down. What is happening to the people who got into a long position over here? What is happening to the people who got into a long position over here? They are freaking out, right? They are freaking out. They are thinking that, oh man, I thought the bounce was going to happen, right? I mean, everything pointed, that the signs were all saying that price was going to bounce here. But the moment this happened, price came down to here. They're holding on to their long positions, right? So remember, they're holding on to their long positions now. And of course, they are freaking out. What we do as good traders is that when people panic, we stay calm. Okay, people panic, we stay calm. What happens after that? Okay, what happens after that? Just let me erase my drawings a bit. Whoa, I draw a lot on this chart. What happens after that is that price, then you can see, okay, nice, one strong bar that spikes up to here. Now, what do you think people are going to do in this circumstance? The moment they see this, people are freaking out and they're getting out of their position, right? Then you can see almost in the next bar. Can you see that? In the next bar, this is how intense the selling can be sometimes. In the next bar, everyone who was long over here, they just freaked out and they sold and they got rid of everything. Maybe I can show you on the 4-hour chart. It might look slightly easier, right? So I'm going to go back to here. Right, remember this is this is a nice swing low support, as you can see over here. The moment price breaks out, bam, bam, down, 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 it goes up, comes back up to here, right? Everyone who was short, who was long, thinking that price might bounce from here, they get out of the trade, right? They get out of the trade, and it causes prices to just plummet once again. Okay, plummet once again. How strong is such a pullback? Usually, look at this, right? It goes down, it gets, people get out of the trade, and this is where you make the money. This is where you make the money. When people are panic selling over here, you start to short and you start to make some money. Okay, you start to short and you start to make some money. All right, if you guys got questions on this approach, please send it through so I know I can answer them. Yeah, but this you will see this happen a lot in varying degrees. Okay, let me show you another shorter term example. Just this move over here. right? Just this move over here, this level over here. Replay, I'm going to show it up, replay feature over here. Can see that price, bounce up nicely. It's a pretty significant bounce. Price is now breaking it, right? Breaking it, breaking down, 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 down. Man, the people who are long over here are being taken for one hell of a ride, right? Being taken for one hell of a ride. Now, then what happens? When price, look at it. Can you see that? It shoots up one touch, right? And it usually drops very strong. There's even another spike up here, right? And people are still freaking out. These were for the slightly later comers, the second spike. But I can see how people freak out and people close the trade pretty fast. The important thing, right, is identifying this nice swing. The more you can identify this, the more accurate you can identify this swing, the more accurate your reversals can be, your pullback resistance and pullback support can be. Okay, it's pretty fun, right? Honestly, it's pretty fun. It's a really, really great way to trade. In this example, other things that I would have considered, right? I would have considered maybe a trend line breakout, right? Breakout pullback. I might have considered a Fibonacci retracement. Notice how price react off the 38% Fibonacci retracement perfectly. Many different ways that you can really improve your technical analysis, right? Your style of trading, your probability of your trades being correct. And that is where, what I'm teaching you today is only theory, right? The value comes when you practice it, guys. Always be practicing. How do you, I'm just going to interrupt this session right here to send you to a particular link. The link is vip.ionfx.com. This is the link that you want to go to, right? It's the INFX VIP trading room run by me, run by my fellow prop traders. It's as long as you have an INFX account, you will get access to this room, right? As long as you have an INFX account, you get access to this room. And let me show you the beautiful thing here, right? So for example, Natalia, right? You might be looking, right, at gold. If you have a question on gold, you can come in here and you can speak to me directly, right? Maybe this is a 5-minute chart. Let's just say you're on the 1-hour chart, right? You're on the 1-hour chart and you see this like overlap resistance over here. Let me see. Actually, you see this overlap resistance that comes all the way back to here. You can come in here and you can go, hey Desmond, right? What do you think of this resistance? What resistance am I referring to? I just need to highlight the text that I just drew. I can click this little button called link object to text. Click on it. I can just click the object that I just drew, right? I can click on this one over here. You notice that it lights up. And I click confirm. So when you send the message through, right, how it looks like, right? So I'm looking at a message like, oh, wow, someone has just mentioned me over here. Hey, Desmond, what do you think of this resistance? What resistance are you referring to? I can hover my mouse over it and you can see it lights up exactly on the chart. So this is where you can practice your analysis. You can ask me questions very clearly. I can jump in over here. I say, okay, so this is the resistance level that you're looking at. Well, it happens maybe. It's not a 30%, say. I might wait for the 38% retracement, right? So same thing, I can highlight 38% retracement and link it. I know it's a little bit hard to see, but I can link it there. And you're like, oh, what is Desmond referring to? What 38% retracement? You hover your mouse over it, it's like, oh, he's referring to this Fibonacci retracement, right? So this is a great place for you to practice your analysis. We have Forex, we got commodities, we got indices, we'll be adding in crypto, right? All the different kind of charts will be here. And anytime you have a question, just go in, ping me and practice your trading. Okay, you might be looking at this and you're like, hey Desmond, is this a double bottom? Right? What's a double bottom looking at? Is this like is this a double bottom kind of formation that we're looking at? Same thing, highlight, link object to text, just select whatever you just drew and you send it through, right? Because when I look at it, I'm like, what is the double bottom you're referring to? Hover my mouse over it. Oh yeah, it kind of looks like a double bottom, then I can, we can guide you, say, yep, it looks like a double bottom. Price might bounce up to this level over here. You can take your profit there. If you do this well, you can be this is what INFX has done to get the VIP room here. It's not easy, right? The very fact that you can get, I believe it's a limited time promotion, that just being able to have as long as you have an INFX account, you will get access to here, right? That is something that I don't think the promotion will last for a long time, right? What you need to know is that when you are in the INFX room, I'm going to show you, right? Some people might be a little bit confused, because when you come into here, right, I'm just going to show you, you will be in this thing called a preview mode, okay? In the preview mode, you just need to click on join INFX server, register. I'm going to show you really quickly. Let me see if I can just register something really quick over here for the tree. I think we have enabled registration. You need to agree to the disclaimers, right? You join the server. Now, when you join, you notice that there are no channels on the site. What you need to do is to click on this thing called request access, all right? This key thing over here. Click on request access. Please attach proof of your INFX live account to get access. You just need to click request to join channel, right? Let me in, right? Maybe you just need to say message, let me in. You attach a screenshot of your account. Let's just say I'm going to attach a screenshot of, let me just attach a screenshot, a random screenshot. But maybe, of course, the screenshot of your INFX account. You send in the request, right? Then we tell you that your request is pending approval. I will come in here. I will see your request. All right, we got Desmond requesting, okay? He has attached the relevant proof. Accept him, and I'll give you like a gold here, and it's done. And when that is done, how it looks like is that you will then have access to all the different channels. Very simple, right? And we have some little congratulations. We teach you a little bit of stuff on how to link stuff over here, and there we go, right? It's a really easy way, right? It's a really easy way to get you to get in. All right. Now, I don't want to deviate too much from our original explanations, but my one bit of advice, if I can, is that, this is a very limited time promotion that INFX is running. If you have an account, if you don't have an account, go register for one, right? But if you have one, just come in here, request access to join, and lock in your position, because I think sooner or later they might be increasing the requirement just to get access to it. So once you lock in your position, lock in your entry into this VIP room, right? That'll be great. Okay, now let's go back. One thing I want to teach you guys, next thing is the overlap. So previously we were talking about pullback. Now we're going to talk about overlap. Okay, what exactly is overlap? Now, what exactly is overlap? Overlap is what happens when price bounces from a pullback. So remember, we have a nice big resistance over here, right? Price breaks out. When it finally pulls back, it pulls back here. When the pullback bounces, it becomes an overlap. Okay, when the pullback bounces over here, it becomes an overlap. Got it? So that means price has respected one time from the bottom and one time from the top. Overlaps are really good because you see in this example, we got a nice reaction here. We got a nice reaction here. This is then an overlap, right? These overlaps are very useful because whenever price reaches it again, it usually, right? It usually reverses, right? As you can see, it usually reverses over here. Bam, it goes down nicely. Okay, overlaps are a great way to trade. It's one of my favorite ways to trade. And I'll be showing you, we'll be practicing a little bit together to see how we can identify overlaps. Okay, then we come in over here, we go into the charts. One thing which I wanted to show you guys is actually on gold, right? So I think it was XAU USD. Natalia was asking, right? Let's see it over here. Overlap. An overlap level that you can look at. In this example, there's this overlap that you can look at. Okay, you will notice how price reacted very nicely. Oh, sorry. Reacted very nicely one time from here, and then it bounced very nicely one time from here. And then, you can see that when price went through, it touched, it go down, it went up, it go down, it went up, it go down, it went up, it go down, right? Because it's an overlap resistance. Overlap levels are very good, but only if you know how to identify them properly. Okay, overlap levels are amazing, but yeah, the important thing is that you need to be able to identify them properly. Okay. So Natalia's asking, right? Just in terms of analyzing gold, what do we expect on gold? Okay, what do we expect on gold? Right? Let me see. I like to put rate as resistance, so I'm going to put this as a resistance area. This is as a support level. A little bit of a trend line breakout over here. Could it be a bit of a channel? Maybe we got a little bit of a channel over here. Descending channel. Yep, we got something like a descending channel over here. Okay, what is the Ichimoku telling us? Ichimoku is telling us that we got a little bit of bearish pressure pushing prices down. My bias, right? My bias is that this is the key level that needs to be broken. This is the key level that needs to be broken. If prices breaks this level, right, I will trigger a sell entry. Maybe I will consider a sell entry to push prices maybe all the way down to here, to a next key support level. But this level needs to be broken first to trigger the move down. Of course, guys, remember, this is not trading advice, right? This is not trading recommendation, but my analysis on this is that what you definitely need this level to be broken first. With the bearish channel that is pushing prices down, with the bearish Ichimoku cloud that is pushing prices down, right, you should be able to have prices being pushed all the way down to the 1678 level, but only if prices close below the 1788 level. Okay, guys, we'll be taking some time to go through some analysis, some examples, right? If there are particular instruments you want me to look at, let me know, right? So whether it's gold, whether it's oil, whether it's silver, euro dollar, right? Let me know if there are any particular charts that you want me to look at. I'm just going to take this chance to show you a couple of instruments, right? And maybe I can to show you how overlap support, overlap resistance works. Okay. You can see over here that this is a very nice pullback turn overlap. Okay. Now let me show you the replay. Look at this. Price bounce off once, bounce off twice. Very nice. What do we say when this happens? When this happens, people are thinking that prices is going up, right? People are thinking that it's going up, right? Just give me a second. Yeah, people think that it's going up. All right. Now, when prices break and it starts to go down, yeah, that's where people start freaking out a bit, right? People start freaking out. It goes down, but it comes back up. Okay, amazing. It's back up. And what happens? This is then what we call a pullback resistance, right? Remember, once prices break out from here and it comes back up to here, this is what we call a pullback resistance. We expect prices to go down from there, right? What happens? Yeah, it comes back up. Yeah, bam, it goes down, it goes down, it goes down. Okay, so this is the pullback resistance that we're looking at. Now that this resistance happened, it is now called an overlap, right? It's now called overlap resistance. Key level to look out for, right? I mean, we go on and we go on and we go on. So I have no idea when it comes back to retest it again, right? I think it might be retesting it soon. Whoa, it's a long time. I need to click on it so much. Okay, it's coming back up to retest it. Let's see, let's see. Yeah, I think it retested it this area over here because of this spike, right? So it retested this area. It goes down again. This is the overlap resistance that you can see in action over here, right? Very nice move. Okay, let me just cancel the bar replay. You can see this was the overlap, and then it comes back up to here again. Same thing, overlap resistance we're looking at. right? Touch it and then reverse. Very, very effective. Okay, this kind of setups are very, very effective, right? And I want you to train your eye to be able to see it, right? I want you to train your eye to be able to see it. Because first and foremost, when it comes to trading, support and resistance, right? It stands almost as one of the strongest things that you can use, right? In our next session, I'll be teaching you trend lines. I'll be teaching you trend lines. I'll be teaching you channels. I'll be teaching you how you can improve the probability of your setups being correct. Okay, you can improve the probability of your setups being correct. Let me see if I have an example where I can show you what it means by improving the probability of your setups. Okay, let's just say we have a resistance level over here, right? This is what I'm going to teach you guys next. Let's say I have a resistance level over here, right? This is the overlap resistance that we have identified. Usually in my trading, now guys, trading is not binary. Trading is not 0, 1, meaning 0 means you don't take a trade, 1 means you take a trade. This is not what trading is like. Trading is 0, 1, or 2, or 3, or 4, or 5, right? So do I risk, how much should I risk on a trade? Well, it's not 1 to 5%, but is, do I have 1? Are there 2 check boxes, 3 check boxes, 4 check boxes, 5 check boxes? How many check boxes are there to suggest that it's a good trade? Okay, the more check boxes, so maybe if I have 5 check boxes or 4 check boxes, I might risk like 2% of my trade, right? If I have 2 check boxes, maybe I risk 1% of my trade, right? So it's about finding how nice a setup it is. Okay, if I have 1 checkbox, maybe I risk 0% on my trade. Okay, so just remember we have a checkbox system over here. Okay, let me just erase everything, draw this thing over here. Let me show you what it means to be like let me just see resistance area over here. We got we got a resistance area over here. Okay, now let's have different checkboxes by the side over here. Okay, let's see how nice this setup might have been. Okay, we got 1 checkbox, right? We got 2 checkbox, we got 3 checkboxes, and I'll explain to you what they mean later. Okay, overlap resistance is 1 checkbox. I call it overlap, right? Excuse my terrible writing. We got overlap resistance. Next thing, I draw a Fibonacci retracement. Maybe I do a 1273. 127%. I know you can't really see it, but 127% is another is a Fibonacci level. I have another checkbox over here. I do another Fibonacci retracement all the way from the top all the way down, right? I pull up the template. Maybe I have a 61.8% that is slightly higher. Not that effective, but it's fine. I have there we go. I know you can't really see it. I'm going to erase this, but there is a negative 27% that is over here. So we got negative 27. That's great. 3 check boxes. And the last one, maybe you take a Fibonacci. I know I'm using a lot of Fibonacci here. I'll teach you guys how to use it in a bit, right? And I noticed that the 100% projection is over there. So I got the 100% projection. I got 4 of it. 4 of it, if I got 4 ticks, maybe I'm risking 2% of my entire account on this trade. Okay, we see prices go up, 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 up. So we got the whole area over here as a confluence area, right? It comes up, it touches it, right? And then it goes all the way down. So that is how you get into a high probability trade. You don't just trade one thing by itself, right? You don't just trade one thing by itself. I believe you might have been able to use a trend line. Trend line wouldn't have touched it, it's fine, right? But you can see that when it comes to trading, you need to see what is the good levels that you're seeing over here. The more, the better. Okay, the more, the better. And I'll be showing you how to, today I've shown you how to use the overlap and the pullback. Over time, I'll be showing you the Fibonacci extensions, the Fibonacci retracements, the Fibonacci projections. I'll be showing you how to use the trend lines. I'll be showing you how to use channels. I'll be showing you how to use Ichimoku. I'll be showing you how to use indicators like the stochastic, maybe look for divergence over here, right? I'll be showing you a lot of things on how to be a better trader over time, right? It's actually pretty exciting because when you know how to do this right, you, like I say, guys, it's a matter of even financial freedom, right? If you know how to trade profitably, you are literally printing money out of thin air. Okay, literally printing money out of thin air.
Hello everyone, my name is Emily. Today our video is about bull and bear markets. So what do we mean by bull and bear markets? Simply put, an asset is in a bull market when prices are going up and investors are optimistic about the future performance of an asset. In other words, when a market, instrument, or sector is on an upward trend, it is generally referred to as a bull market. The opposite of a bull market is a bear market, when prices are going down as most investors are feeling pessimistic. Falling prices create a negative market sentiment. When exactly are we in a bull or bear market? According to the Dow theory, we say we're in a bull market when prices have increased by at least 20%. If prices have gone down by 20% or more, we say that we are in a bear market. However, even though a 20% increase in market prices is often regarded as the start of a bullish trend, most signs of an approaching bull market are not that clear. Therefore, traders use technical analysis to help them recognize bullish signals. And finally, how long do bull and bear markets last? Well, bull and bear markets which last more than 5 years are known as secular, and shorter bull-bear markets are known as cyclical. That's it for today, guys. Thank you so much for joining us. Bye-bye.